Hello again. For Mark Bunting, I'm Michael Hainsworth. We're getting back to your questions today, and oh my God, they queued Kenny up into the system. He joins us from Thornhill. Hi, Kenny.
Hi, Dave. Hi, Michael.
Hey.
I wanted your opinion on Salesforce, if they're going to be acquired or what's going to happen to them in 2014.
All right.
Thank
Sure.
CRM.
Well, I wish I could tell you whether they were going to be acquired. But Salesforce, for those that don't know, is a software company. It's cloud-based software used for customer relationship management. If you look at from a sector strength standpoint, software sector is behaving extremely well. Within software, cloud-based software is really the standard, and within the standard, CRM really is the leader. They have very, very strong momentum in their growth. Their quarterly revenues have been growing, mid 30% range. It's an expensive company, so you have to understand you are buying momentum here. If you believe corporations are starting to loosen up a little bit in their spending, they've been holding back on spending, especially on things like software. There is a pickup in growth coming. But you're paying like 160 times next year's earnings.
And the PEG ratio is 5.6. So I wonder if there is even a slight stumble in execution for this company, what would happen to the stock?
Right. It would have a very tough time. Having said that, we own some stock. So
underweight, equal weight, overweight?
Well, we have about a 2% weight in one of our equity portfolios.
Underweight.
So it's not a big weight. Is it likely to get bought? It's a $30 billion company. So I don't think it's that likely to be purchased. It would be a big chunk for somebody to buy. Having said that, we do believe that corporations are spending a little bit more. We do like industrials. We do like technology. This is a leader in the group. It is expensive. It may well be that estimates are too low, and that's often why companies look expensive. Well, then so we own the stock, but we understand it's a higher risk position. It's a higher beta position. And you have to be prepared to take lumps if they disappoint. They've just been extremely good at executing.
What about a company like Oracle then, if you like cloud?
Well, the thing is that Oracle has not transitioned to the cloud as well as some others, like, for instance, SAP.
Okay.
So I would say that SAP has done a better job of transitioning to the cloud, but neither of them really can compete with CRM, which was a cloud-based company to begin with.
All right, Kenny, thanks for the call from Thornhill, Ontario. We've got a tweet in here as well from Frankie asking for your thoughts on SNC-Lavalin, writing, they recently had a losing quarter, but since the loss, the shares have rallied.
Yeah, certainly the engineering and construction sector has been performing well. Recently, a lot of the stocks have broken out, again, on the basis that corporations may be spending a little bit more money on things like infrastructure. SNC is performing in line with the group. There are always political risks with SNC. So we are not stakeholders currently. The stock has been trading in the $40 to $45 range now for months and months. It looks like it's trying to break out. I think that I would prefer to wait and see.
What about a Stantec, an Aecon, a Fluor Corporation?
There's a bunch of those that are behaving very well, and I think that it's a group you can take a look at.
All right, thanks for the tweet. We're going to take a brief break, and just a reminder, you can send your questions via Twitter. Market Call is the handle. We're keeping an eye on that, as well as my own Hainsworth TV. David Burrows is here from Barometer as we talk today about North American large caps. We've got the phone lines open as well at 1-855-326-6266.